Hello, welcome to Queensland Economy Watch, the week that was. It's Saturday the 23rd of February. My name is Gene Tunney and I'm recording this video in Spring Hill, Brisbane. It's been a very busy and interesting week for me. I began the week in Canberra, where I attended a housing industry roundtable hosted by Treasurer Josh Frydenberg at Parliament House. The meeting was briefly interrupted by the Prime Minister, Scott Morrison, who dropped in to say a few words. He wandered up behind the Treasurer. He sneaked into the room and he grabbed him by the shoulders, surprising him in the middle of the Treasurer's introductory remarks. Both the PM and the Treasurer and Assistant Treasurer Zed Saselja appeared very encouraged by the Ipsos poll that was released that day. Now, as you might expect from a roundtable full of representatives from the housing and property industries, so here's a photo of the roundtable. So everyone's looking at the Treasurer, Josh Frydenberg, and you see other people in the room. You see reps of the Property Council and the Master Builders. You might also see Mark Burris there. I'm sitting next to Noel Whittaker from Queensland, who's hidden, and next to Noel you can see Louis Christopher from SQM Research. So, as you might expect from a room full of these representatives of those industries, there was a lot of concern expressed about the changes proposed by the federal opposition to negative gearing and the taxation of capital gains. So this is an issue that I've covered on this blog, and I've also written about in the past, particularly in the CIS's policy journal, and I expect that that's why I was invited to this meeting. I think that's why the invitation was forthcoming. Now, these changes, along with the changes to the refundability of franking credits, of concern, and particularly given the economic outlook that we have in Australia at the moment. The 7:30 report had a very good report, incidentally, on the franking credits issue on Monday night, and I would highly recommend that. To me, the really big news of the past week has related to coal. We're waiting for a resolution to the stoppage of the Australian coal exports at Dalian. We also saw that Glencore announced that it will cap its coal production globally. And the Financial Times reported that this was in the face of pressure from big investors who are pushing natural resource companies to take firmer action on climate change. As I've noted on my blog previously, the Queensland economy is, and particularly some regions such as Mackay, Isaac, Whitsunday and central Queensland are very dependent on the coal industry, so our economy is very exposed to changes in sentiment regarding coal. We are protected to some extent by the fact that the majority of our coal production is for coking coal, and currently there's no real practical alternative for using coking coal in steel production as far as I can tell. So that provides some level of protection. That said, I think our state and local officials should keep in mind worst case scenarios when they're revising their economic development strategies. ABS data released last week weren't surprising and consistent with the general consensus on how the economy is performing and what the outlook is. The ABS titled its media release on the November wages data, "Continued Low Growth in Average Earnings." As you can see, Queensland has been a little bit higher than the other major states in earnings growth, and that's mostly due to the resources sector. Despite the strong resources sector, Queensland does continue to have a significantly higher unemployment rate than the national average in southern states. I'll just go back to that there. You can see that the unemployment rate in Queensland remains above 6%. The national average is at 5.1% in trend terms, and New South Wales and Victoria's unemployment rates are approaching 4%. So we're substantially above where they are, and that's because we've had weakness across several sectors other than mining, and I've discussed before tourism. I mean, my view is that I think tourism is performing strongly, although there are concerns about particular markets. I've heard some concerns particularly around that Cairns market, but generally I think tourism is performing well. It's just that some other sectors aren't, and so overall our employment growth is around half the rate that it is nationally. As I mentioned earlier, the sentiment, or as I alluded to earlier, the sentiment at the meeting in Canberra on Monday was pretty negative. So the industry representatives are very concerned about the outlook for the Australian economy, and I think, if I recall correctly, Mark Burris was quoted as saying, regardless of whether the opposition's policy is right or wrong, they need to be careful implementing it at this current time, or words to that effect. And that's given the economic outlook, which isn't particularly encouraging. So there are serious concerns about that among business people and market economists. For instance, on Thursday, Westpac Chief Economist Bill Evans warned of falling house prices creating a negative wealth effect, dragging the economy down and forcing the RBA to make 2 cuts to the cash rate this year. So from 1.5% to 1.25%, and then to 1%. So these are all record low cash rates. Now this is a phenomenon. This phenomenon of this negative wealth effect, I referred to this in my speeches on the outlook a couple of weeks ago. So I think what Bill Evans is saying makes a lot of sense, as disappointing as that is for our expectations regarding the economy. Finally, I'd like to note that my colleague Nick Behrens has also written some good pieces on the recent economic outlook and the recent economic data from the ABS, and I will provide links to those on my blog. Thank you for watching. If you have any questions, then please feel free to get in touch. Thanks.